Good morning, traders. Let's discuss the daily market analysis of what's happening in the financial markets and how it's impacting the assets which we trade. So, the US dollar index held near the 104.5 area in Wednesday's trading, better than expected data on durable good orders for February, coupled with hawkish comments from Federal Reserve officials, helped the dollar edge slightly higher. However, momentum indicators remain divergent, suggesting that the upside remains fragile. The US dollar index had a mixed performance in Asia on Wednesday, trading above 104. Earlier, the dollar found support on strong service sector activity and the possibility that proposed tariffs may be more targeted than expected. The dollar index briefly fell below 104 following headlines from US President Trump and Vice President JD Vance. The index re entered above 104 on Wednesday while the market evaluated two major stories. The first market driver came from US President Trump, who issued a 25% second tariff on countries that still buy oil from Venezuela. Meanwhile, the market awaited comments from the European group after US news editor was mistakenly invited to join a signal chat group with several Trump administration officials, and JD Vance's comments on Europe painted a clear picture of how he would like to see the EU targeted by tariffs to pay for the US military campaign against the Houthi rebels. So the US dollar index is trading cautiously above 104 mark, reflecting a balance between weakened sentiment and residual optimism from Monday's gain. The technical indicator MACD on the daily chart currently sends a slight buy signal at minus 0.774, supported by the 10-day momentum reading. Meanwhile, the 14-day relative strength index RSI is around 45.5, indicating that the currency pair is not oversold but lacks bullish conviction. The combined RSI also reflects hesitation with a reading just above 96. Despite these signs of recovery, the overall outlook remains under pressure, continue to trend downward. The 30-day moving average is above 105.2, further reinforcing the heavy pressure zone on downside. Support is at the 104 mark as well as 103.83, which is 14-day simple moving average, and then 103.2, this year's low. The upside targets are 105 round mark and the 0-day moving average at 105.2 levels. You can consider shorting the US dollar index near 104.64 today. Stop loss will be 104.78. Target can be 104.2 or 104.1. So, if we talk about the crude oil, then on Wednesday, international oil prices rose, boosted by falling US energy inventories and concerns about tightening global supply. Earlier, US President Trump threatened to impose tariffs on countries that buy Venezuelan crude oil, triggering market concerns about escalating geopolitical risk. WTI crude oil traded at $69.15 in early Asian trading on Wednesday. WTI prices continued their upward trend due to a larger than expected drop in crude oil inventory and concerns about tight global supply caused by threats to impose tariffs on countries that buy Venezuelan production. Crude oil inventories fell more than expected last week. US President Trump said late Monday that he would impose a 25% tariff on any country that buys oil from Venezuela. Concerns about the tight global supply pushed WTI prices to a 3 week high. On the other hand, the United States reached an agreement with Ukraine and Russia to suspend maritime attacks and attacks on energy targets, and Washington also tried to ease certain sanctions on Moscow. The maritime and energy ceasefire between Russia and Ukraine offset concerns about tight global supply, which could drag down WTI prices. From the daily chart, crude oil is currently on a new high before hitting $70, which is a market psychological barrier. It was blocked and quickly fell back to around $69. The overall trend rhythm is a high level repeated shock pattern. The 25-day simple moving average of 68.16 has certain support effect on oil prices. From the technical indicator of the daily chart, the 14-day RSI is in the positive zone. Latest report, it's 56.15. The rebound in oil prices is still slightly insufficient, resulting in poor short-term upward continuity. It is expected that the trend will fluctuate and consolidate during the day. The downward direction can consider the 25-day simple moving average of 68.16. After that, it will look to 67.07 barrel last which is the last week's low, and the larger support is expected to extend to $65, which is the March 11th low. As for the upside, if oil pushes the prices up to $70, if the breakout is expected to have more obvious bottom tendency, the extended target will be seen at $72.51, which is the 200-day moving average. Today, you can consider going long on crude oil around 69.6. Stop loss can be 69.45, and target can be 71.2 or 71.5. So let's talk about everyone's favorite, which is gold. So on Wednesday, gold prices remained stable at the end of North American session, with spot gold trading around 3020. Gold prices rose on Tuesday, supported by safe haven demand. The uncertainty of the tariff plan to be announced by US President Trump next week may stimulate inflation. Investors are worried about the world situation, especially US policy, so they buy gold as an alternate asset because they are worried that the US government may plunge the world into a global recession. Gold prices have risen by more than 16% this year and hit a record high of 3057.50 on 20th of March. Considering that the current total volume is still below the peak reached in 2020, there is still room for further increase. Gold backed ETFs have been outflows over the past few years. Global gold ETFs holding were essentially flat in the fourth quarter, ending the year close to where they began, even as gold prices rose 27%. Trump's tariff policy will drag on economic growth, spark further trade tensions, and push inflation up. From the recent trend, gold's uptrend continues despite a lack of confidence from buyers, which failed to achieve a daily close above this week's current high of 3036, which could be intensified the test of the record high of 3057.5. A breakout of the latter would pave the way for a test of 3100. The 14-day RSI, a technical indicator on the daily chart, is bullish and momentum supports buyer. Therefore, gold prices are expected to rise further. On the other hand, a break below $3,000 would expose the 24th February high of 2956 and $29 59.8, which is 20-day SMA, with a move towards 2945, which is 50% Fibonacci retracement of 2832.5 to 3057.50. The $2,900 mark follows. Consider going long on gold before 3016. Today's stop loss will be 3012, target will be 3038 and 3042.